Good morning. It's the 26th day of March 2023. Green shares slide. As you know, I believe this whole green thing is all part of this woke, uneducated, ignorant society we live in, where people with no understanding of what they're doing go in and vote for the like of Eamon Cabbagehead Ryan and all of those Luthermans that wreck everything they touch, including radio television, but they're not getting their hands on this RTE site here. I want to read you from the Financial Times. I believe we have to get back to good environmental way of doing things and running our country and the world, and this green woke way with renewable energy is not the way to go and has brought disaster to Europe when it's now facing what they think is war, and they can't even make the bullets and the ammunition, not alone the weapons and the guns, to fight it, because of this crazy reliance on a 16-year-old schoolgirl to tell them what to do. The Financial Times is the name of the paper. I know some of you may turn off. I don't really mind. It is maybe not for everybody, but it is part of a campaign by a few of us, and I'm one of them. There's a few others, and to see how we're steadily gaining ground and defeating our enemies, which is the woke green renewable energy agenda, because it doesn't work at all. Wind energy and solar farms are net consumers of electricity when measured over 1 year. And the heading is Green Investment Trust face vote on future as shares slide. I hate to say this to you folks. The arse has fallen out of the shares. Green Coat Renewables, €100, that's the 100-cent share, is this morning trading at 85 cents. And I think it'll drop a lot more than that. It could go way down. Anyone that would buy into that is mad. They've already now losing 15 cents, 15% on their investment at a time when inflation is going up at roughly maybe 8 or 9%. So if you take that together, it's about 23%. A lot of these are Dublin doctors and Harley Street specialists and all these rich people that invest in this because they're too stupid. And as they say, you can fool some of the people all the time, but you're not fooling me. This will make poor men out of them. In addition, no, we'll go on now. I'll just read it. Now, Green Energy Investment Trusts face investor votes on whether they should continue trading as a prolonged slump in share price hampers access to capital and presents challenges to the green transition. Everything's transition nowadays. Oh, you transition from a boy to a girl, from a girl to a man. Oh, transition to electric cars. How's that going for you over there, folks? Transition. I never transitioned anywhere. I'm still the same as ever I was. I'd love to transition to be a violin player. I've always wanted to play the violin. That's the transition I'll be doing. Right, great transition. High interest rates have lured investors into other assets, while onerous fee disclosure rules, in other words, they have to disclose their fees and all that. They don't want to tell anyone anything. Onerous fee disclosure rules have made trusts appear comparatively expensive. In other words, when the truth is told, it's realised they're more expensive than if the truth wasn't told, weighing on the sector and pushing them to trade at a steep discount of net asset value. Now, the net asset value is what they say their accounts and their wind farms and their solar farms are worth. I say they're worthless. You ain't getting anything back, folks. They're worthless. But they claim, oh, they are, but we're not able to get enough share capital to justify the cost of them. They're not telling the truth, or they're deluded, one or the other. Several green energy investment trusts, including the UK's largest, Green Coat UK, they're connected with Ireland here. They're trading at 85 cents, the Irish branch of them today, have either crossed or are on the brink of crossing their own threshold for a vote on their future. Well, I tell you how you vote. Get the hell off the scene and go on, you'll get jobs in McDonald's. They're looking for people to do the burgers, especially where you drive through, and I can go around in the van and you can, I'll get me burger, me Big Mac, and me big, what do you call that stuff to do, the drink, it's McFlurry, is it? Oh, a strawberry milkshake. That's the place for you people in Greencoat and all of these green scammers, right? So I'd have crossed on the brink now, and I've either crossed or are on the brink of crossing their own thresholds for a vote on their future. Votes are due to take place at annual shareholder meetings. They thought, those who put the money in at £1 euro share, they thought Greencoat would be trading now at maybe €8 or €9, and comparatively in the UK. Now, meanwhile, Cool Wind Farm was refused, and Rah Rah has been shut down for over 2 weeks. The trusts have been unable to raise equity to invest in green assets. Doesn't your heart bleed for them? They're unable to raise any. Richard Bruton, that old Fine Gael idiot, was going around trying to persuade poor little nurses and that worked so hard to look after us when we were sick and our people to throw the whole gratuity into this junk. Oh, they're the vicious. That's why I have been knifing Fine Gael of all. They're more vicious than the Greens are. The trusts have also been unable to raise equity to invest in green assets, as they generally avoid issuing shares while trading at a discount because this would dilute existing shareholders. I presume what that means, folks, now, and I have a business degree, but it's a long time since I did it. I presume what they mean there, if they were to try to raise shares now at 85 cents, let's say in Greencoat Renewables, and people bought, we'd say, 1,000 shares, at 85 cent, that'd be €850. Isn't that right? I think I'm right there. Right. That'd mean that the existing people holding those shares would be beaten. Do you know what I'm getting at now? So you'd be here. You paid 1,000 for your shares, and they're only worth 850. And now another lad over here is buying 1,000 at 850. Well, where does that leave yours? If I was after buying a cow in the mart at €2,000, and I brought her out the next day and sold her, and all she made was 1,500. Well, someone got ripped off somewhere. Someone fooled me, and I'm going to lose 500, and somebody's going to get a better cow and better value. Do you understand? So that's what they're at there. This is all part of the thing collapsing. I don't think anyone has raised any equity since late 2022. Oh, gee. Late 2022, they got nothing. I think there's a few wind farms around that were granted permission and they're not granted. They're not built. Said Matthew Hose, H-O-S-E. Probably Jose, is it? There's a fella in Dublin, a gay lad called Pantyhose. You can go up and join him. Oh, said Matthew Hose, equity analysis at Jefferies. There must be some finance crowd in London. And when I started campaigning against the windmills, I started getting calls from the Dublin finance houses thinking I was going to invest. That's the way they got confused. They've had to adapt to this new environment. Yeah, you'll have to adopt a lot worse when we're done with you. Some funds will probably get back to a premium. Why would they go back to a premium? They're losing money. They're losing money everywhere. Some funds will probably go back to a premium, but some funds won't. Some girls do, some girls don't. Some girls need another loving, and some girls won't. She says she do. She says she don't, but I know she do. Wasn't that Chuck Berry's song? But some won't, and there'll be pressure. There'll be pressure to wind those up. Well, sure, if only 2% of them winds up, where does that leave the rest? How does he maintain some of them are going to hold up when some of them are going to wind up? This is great. This is as good as a tonic to me. The investment trust sector overall has suffered from the effects of high inflation. No, your windmills do not do the business. That's the point. Over the past 2 years, which has pushed investors to lower risk, higher yielding government bonds and cash products. In other words, as inflation goes up, the government needs money in America and here and European Eurobonds, and they have to pay a bit more, and they print money to pay the interest. You see, so it's better off stick your money in there at 5% than stick them into this crap where not only you might get a dividend, you might get 4%, but the share price goes down 15%. And as I think it was Mark Twain, I think it's he said, the return of your money is more important than the returns on your money. In other words, it's better to get it back than not get it back, but get a high interest. You know what I mean? No. So, and other cash products. So there's competition there. As inflation went up, there's competition, and people are not putting into the windmills anyway. Even the stupid ones, see, they're still not profitable. The average trust was trading at a discount to net value of 16.9%. You see, the average trust 16.9%. Now, you see, Greencoat is trading at 15% this morning. In October last year, that was October, okay? Now, it was trading. Now, just shy of 17.7% recorded at the end of 2008. That was when the financial crash was coming. So they're nearly down to where they were in the financial crash, according to the Association of Investment Companies. I remember about 2 years ago, the late Eddie O'Connor, he was the daddy of them in Ireland. He said that the wind industry was on its knees. Fund and wealth managers, as well as peers, have been calling for a change in the way investment trust fees are reported. Now, you see what they're trying to do? These things are falling through the roof, and they want to fool people. They want to have less requirement to tell the truth. To tell the truth. Isn't that something? You need to get on to me. Post underneath here, and I'll make contact with you, Mr. Fund and wealth managers, as well as peers, have been, and that's Harley House of Lord peers, I don't know, who have been calling for a change in the way investment trust fees are reported. I don't know why the fees matter. They're either going to make money or they aren't, which they say has further depressed share prices. The UK's Financial Conduct Authority has interpreted onshored EU regulations differently to the rest of Europe. Onshored EU regulations. I don't know why the EU is to do it. It's just it's the EU's out of, isn't UK out of the EU, meaning that investment trusts in the UK have to report their fees in a similar manner to open-ended funds. Again, I'm lost. I admit it. Hands up. We'll find out more. We'll be back to you. Critics say this results in double charging, as the share price that investors pay for trusts already included the ongoing costs. Again, I'm a bit out of my depth there, but that's their problem. Hedge funds have begun to circle. The hedge fund now, they're the derivatives. They're the crowd that are backing them up. So they have hedged off the possibility of huge losses. So when this thing collapses, it's not, some of the wind companies will collapse. Some of the banks supporting them will lose all, but some are hedged. That's like hedging. Ryanair, for example, often hedges as fuel, so if the price goes way up, they're not caught by the high prices. And hedge funds are a big thing nowadays. I dealt with them before. We needn't go too far there. Okay, so they began to circle their wagons around them, saying, hold on, what about our money? They can put in a call option. They could put in a call. The noise there is me cat. She's tricking around the place. But they can put in a call option, right? So that's what happened when Quinn had nothing. When the whole thing fell out of Quinn, the next thing was he got the margin calls. And you have to pay up no matter where you get it. So now they're going to look to wind up some of them. But I can tell you they'll wind up none, because their basic assets are worth nothing. They're a loss-making thing. Okay, so hedge funds began to circle, with Elliott taking 5% stake in a Scottish mortgage investment trust this week. So the mortgage investment trust and people's pensions are stuck into this. And when people want, if you think anyone that's investing in companies that invest in windmills, you're ever going to get a pension, you're getting sweet Fanny Adam. You're getting nothing, right? A week after it announced a 1 billion share buyback in an attempt to prop up the share price. So it's the same as if Greencoat Renewables today got $1 billion somewhere, borrowed it probably, or got it from some stupid investors, some investment fund that takes the money of a good company like Guinness's or Moffat Engineering or McHale Engineering, and dumps it in to buy up the price. So they buy up, we'll say, 100,000 Greencoat shares at 25 with some money or borrowed money, And that is expected to raise the price because the average ordinary lad with money sees, oh, they're going up, they're rising fast. Oh, they're now to 86, 87, 88. Buy. That's what that is. That's a fake way of raising the value. Where they get the money to buy them is another day's work. This will probably all go through the system and eventually end in a massive collapse. So I'll read that again to you folks. Hedge funds have begun to circle, with Elliott, that must be a hedge fund crowd, taking a 5% stake in Scottish mortgage investment. So what they're doing is they're taking stakes in them to try and safeguard their money. That's not going to work either. Now, investment. A week after it announced a 1 billion share buyback in an attempt to prop up the share price. The impact on green investment trusts is particularly significant, given the need for new funds to build wind farms. New funds to build wind farms. Oh, hands out, give us the money. We want to build. I'm telling you folks, you wind farm developers, you'll get a job in McDonald's. You won't get into Lidl's. They are after giving their staff 15% of a raise. Lidl's discount store, and they seem very happy. You won't get in there. McDonald's might take you now. You might get in there. There's also might be jobs, other wee jobs going, maybe cleaning public toilets and all that. I don't know. That's the thing what I recommend. I suppose you have to feed your families. The impact of green investment trusts is particularly significant given the need for new funds to build wind farms, solar farms, and more to meet the country's legally binding net zero targets. Net zero. You stupid idiots at Rishi Sunak. Where is he going? Investment trusts typically play an important role in the sector. And they do, of course. Handy money from people think they're going to get it back. Often buying up assets from large developers such as Ørsted. Yeah, they buy the windmills when they're built. Ørsted builds them, and then this is the model. Get rid of them. That's what happened with Rara, and that's what was going to happen with Cool. It was refused last week. Cool Wind Farm was going to be sold on to BlackRock as well. This is the model they use. So they play a huge part, often buying up assets from large developers such as Ørsted or others who can use the cash to develop new wind farms. So it's a Ponzi scheme. So they build a wind farm, they sell it on to these pension funds, they get the money, as in the case of John Lang down in Tipperary with Glencairn Wind Farm, I think it is. He could make no money. And these are all loss making, so they dump it over to somebody else to carry the loss, and they go off and they build a new one, and a new one, and a new one. That's a Ponzi scheme because there's no underlying asset. Okay, the lack of access to equity markets definitely means we have to be more selective around the opportunities we pursue. No wind farm or no solar farm can ever make money, said Edward Mountney. Mountney, fund manager with JLEN, which is listed in London with the market capitalisation of 630 million. 630 million. Well, we'll see how long that lasts. But of course, it's not only that money that'll go, it's the unfortunate people who think they're going to get something back from it. In order for renewable infrastructure sector to grow, and then none of them can make money as it is, so you're going to build more, and it can't be used, electricity, it will need to raise equity over time. Of course, we all love to get equity. I'm fairly good at the old horses, good old horse backer. I can back horses, and I'd take equity if I could have a company which wasn't liable. In other words, if I had a limited company, I'd take in all the equity and put it on the horses. If I lost, I can just walk away. That's the reality. We need to raise equity over time, and it's almost impossible to see that happening while we continue to see a discount on the net asset value. NAV means net asset value. Your assets are worth a lot less than you think they are. They're only scrap steel and old junk. That's it. Said Paul O'Donnell, investment manager with Greencoat Renewables. Now, Paul, why don't you have a chat with me? Paul O'Donnell, that's an Irish name. So you're the investment manager with Greencoat Renewables. Your share price is 85 cents. That's the 100-cent share. Paul explained that. And it ain't going up unless you can pull some stunt and get some idiot to give you money and buy a heap more of them, and that'll only keep you going for a month. A sister fund of Greencoat UK. Okay, JLEN is likely to cross the threshold for discontinuation vote at the end of its financial year this month. When the share falls enough and it's worth, your company is worth nothing. If the company really was worth something, people would come in and buy the shares. But if they know it's worth nothing, and I would take some credit for pointing that out, they won't buy the shares. So then you have to consider, do you really want to keep going? I mean, if you're a private company owned by one man or one woman, would you keep going? If the thing was losing money, you'd have to close up shop. Greencoat UK Wind, which supplied about 1.5% of UK's electricity last year, that is not true. That's a lie. When you count it properly, you do not supply anything. They're net consumers of electricity. From its portfolio of wind farms, will face investors at its annual general meeting in April. That'll be good to be at that. I'd love to be a fly on the wall. After trading at an average discount to net assets value of 10.5% during 2023. That's exactly right. You can get the price up there. Now, do not confuse Greencoat UK and Greencoat Ireland. Greencoat Renewables is the one you're looking for, and it's 85 at the moment. UK is a different one. It's a different basic price. So there's 10.5%. It's now 15%. It's now 4.5% less valuable than when in 2023. Get me point, folks. Foresight Solar Fund will follow in June after also it's trading at a discount of more than 10% during the year. And I'd say that's down. That's Foresight, F-O-R-E-S-I-G-H-T, Solar Fund. You can check that yourself. Rising global interest rates have damaged the green stocks broadly. Yeah, because they have borrowings as well, and that's sinking them. High interest rates, making them relatively less attractive to investors as bond yields have risen. Isn't it an ill wind that blows no good? The Standard & Poor's Global Clean Energy Index, which includes clean energy giants such as Ørsted, must check them out, Ørsted, the wind farm developer, is down almost 60%, 60, below its peak in January 2021, at the height of our frenzy over the sector. People think I'm a bit mad at all this stuff. This is grist to the middle. I feel great when these crowds are broke out. Anyway, I just read. Richard Crawford, head of energy income funds at Infrared Capital Partners, another lad that needs to go off to McDonald's there and get himself a real job, which advises London-listed renewables infrastructure group, said, I think it's fair to say that renewable investment companies would have raised money had their share price not been where they are. I mean, that is some statement. The share price is low, so we can't raise money. What keeps the share price up is confidence in the product, confidence in the value of the assets, and confidence in them making money, and they're making nothing. And he makes a ridiculous statement. I think it's fair to say, no, it is not fair to say, Richard. Renewable investment companies would have raised money had their share price not been where they are, as an asset class growth is slower as a result. Folks, that should say it all. Nobody's buying their old stupid shares, and he says that's why we're not getting more money in. The reason is that when you commission a wind farm, it loses money, and if you counted the depreciation correctly and the fact that it's worth nothing at the end, then it's worth less. And then they include the leasing of the land to the farmers, and they say that they count that as an asset, that they can go up on the land. They don't own it after a certain time. What's good is the lease if the wind farm is no good? What else can they do? Can they turn the lease to doing something else? Can they farm on it? Can they put sheep out on it? No. So this is all a real good lesson in an elaborate government-backed Ponzi scheme. An elaborate government-backed Ponzi scheme. And we're seeing it in its death throes. Rah wind farm closed on the 6th of March, and it hasn't went yet. It may open again. It's costing €269,000 a year. Somebody has to pump in that money in there. Who's pumping it in? I want to warn you. You must warn people. If you know people who are in jobs and they're going to retire or get a gratuity, for God's sake, you're better than never join that job than lose all to these scam artists. Folks, give me a thumbs up or a thumbs down. We'll see you back for something soon.